Welcome to 6 African Trade Talks, the show that brings you closer to the intra-Africa trade business world. I'm your host, Chad Chawanda. In this episode, our guest is Marc Msipa. Marc is the co-founder of Tigere Housing Company. Marc, welcome to 6 African Trade Talks. How are you?
Thank you very much. I'm glad to be here. I've been looking forward to it. I'm very, very well. I think all cylinders are firing. I've had a fantastic week at Tigere and other areas of life as well. So this is a really good time to be here.
Thank you very much. Pleasure having you here. Before we start, we'd like to hear a word from our sponsors.
Would you travel to Cape Town for business or leisure? What if you could combine the two? Well, you can. With Optimum African Experience, Cape Town Leisure Experience, with partners such as University of Cape Town, CEDA, Kadena, Luminary, and Prime Focus. Experience the best of Africa.
Marc, tell us a little bit about your journey and experience with investing in Africa.
Sure. So my journey with investing in Africa actually begins in London. I was still studying law at that time. I had the opportunity to do some internships with some of the largest corporate law firms there. And that was really my first exposure to kind of investing in finance and technology from the legal side, looking at the contracts and what they were trying to achieve. From there, I went back home to Zimbabwe, where I started my career in commercial law at Advocates Chambers. I had a fantastic mentor there, Advocate Firoz Girash, and we did a lot of commercial law disputes. We went to the High Court, the Supreme Court, and off the back of that, I was recruited onto the Barclays Bank Pan-African Graduate Eagles program. And that was a precursor to me being recruited by the bank into their corporate and investment banking division. And that came at an interesting time. That was when Zimbabwe revised its exchange control laws. And there was also the introduction of the bond note. So it was a great time to be trying to be doing investment banking and corporate banking structures. So learned a lot. I had great bosses there, Lawrence Zema, Wellington Chinyanganya, Nixon Malambo, really, really great mentors who walked us through a really interesting time in the economy. From there, I was recruited by Stanbic Bank, a subsidiary of Standard Bank, for those who don't know, but in Zimbabwe, and I led up the compliance element of the corporate and investment banking division. So I looked after 5 business units, and I had a great boss there, Stutukile Sibanda, great colleagues, Jeff, Shindi, Tari, Ropa, and I was the youngest manager for a while on the team. So they really got me up to speed with some of the elements where I was still learning. And then from there, I realized I wasn't as technical as I wanted to be in the finance side of things. So I applied for the Cambridge Masters of Finance program, went and did that, got recruited by the World Bank as a development impact consultant. And from there, I got into venture capital. I was at Global Ventures, firstly, as an intern, and they asked me to stay on a little bit after that. Following that, I was already kind of an advisor to Tigere at the time, but I wasn't doing it full time. And so now, when we look at my role at Tigere, is really an extension of having joined them in 2021, right at the inception, with the 2 operating founders being Vusa and Tanaka. So that's been my experience. Basically, I started out in banking, went into development banking, and now I've done venture capital, both from the investing side as well as from inside of a startup.
What an interesting journey. What lessons can you share that can help someone out there who wants to invest in Africa? It could be diaspora. I mean, you've lived in the UK, or it could be an international investor.
Sure. I think there's really 3 things that I've learned, especially, I think 2 of them from being on the continent, investing in African startups. And the last one being from inside a startup, trying to sell the business to outside investors. I think the first thing is in a lot of our conversations, we see a misunderstanding of the opportunity set. So we find a lot of investors kind of look at Africa as one homogeneous continent and $3 trillion GDP, 1.3 billion people, and they look at it kind of from that lens. But we have 55 distinct states and very different markets, even regionally. We have 8 regional economic communities. And so the opportunity set, I think, first has to be looked at locally, then regionally, then continentally. The second part is, I think investors adjusting their risk metrics for Africa specifically. And what I mean by that is I've found due diligence tends to take longer for African startups than for non-African startups. And I think there's questioning around, the validity of certain numbers or market estimates. Now, part of that is lack of access to reliable data or consistent data across markets. So that's fair enough. But also, I think there's a kind of Africa discount that is applied at this stage. And then from inside a startup, so Tigere does incremental housing finance for the informal sector workers in Africa. So that's people who don't necessarily have a payslip, people who don't necessarily have proof of residence, but who want to access a loan to be able to build their house in stages. And what we found is when we make reference to the informal sector, the word for that in the first world is gig economy workers. So that's your Uber drivers or whatever. In Africa, we call it the informal sector, and that often has connotations to people unfamiliar with it of illegality or criminality or the urban poor, which is absolutely not the case. Africa's middle class, at least according to the ADB, is about 300 million people, and they earn a minimum of $300 a month. And so, when we talk of informal sector, you can have somebody in that sector who is actually in the middle class. And so we've had to kind of really be clear on our wording to really get that understanding across.
Thank you very much for sharing, Marc. You're dealing with the informal sector from a Tigere perspective. Property is quite interesting. What is the lowest value of property and highest value of property that you guys have dealt with so far?
So far we've dealt with, and it's a really interesting question. We've dealt within property different types and also housing supplies. So we have people coming in wanting to buy even 1,000 bricks at a time. And then we have people who already own their stands, plots of land, as they're called in other places. Some of the stands can be worth up to 10, 15,000 US dollars. The highest value we've seen so far is about 40,000 US dollars. So that was a 1,000 square meters valued at about $40 per square meter. And so we've seen quite a wide range in terms of land that either people own or want to buy or are building on. And again, it goes to that misunderstanding of the capacity in the informal sector. In fact, if I could just share some stats with you. So there was a study done by the Finmark Trust in 2013, so it's slightly dated. But basically, they did a study on Zim's informal sector, and they found that 2.9 million people are employed by SMEs in Zimbabwe. And that generates about $4 billion in economic activity. So it's a significant part of GDP. And that really goes to the heart of the problem that we're trying to solve.
That's quite interesting. I'm from Zimbabwe myself, and I remember at one point we wanted to set up a mortgage company, and I realized that there were 1 million houses unmortgaged. So that's quite an interesting space that you are in. In terms of investing across the continent, what check sizes have you experienced? The lowest, the highest?
When I was still with Global, for example, that was mostly series. There were certain thresholds in terms of revenue. And Global has been one of the leading investors in terms of investing in African startups and really providing even post-investment portfolio management, advice, assistance, support, all of that. I mean, I'll just make reference to the report by Partech Africa, which really is the shining light on kind of venture investing on the continent. So last year, i.e. 2022, the value of venture investing across Africa was about $6.5 billion. Now, that was interesting, not just for the quantum, but also because that was a year where globally venture investing declined by about 30%, whereas in Africa it did not. And interestingly, one of the drivers of that number, about $1.5 billion of that 6.5 was debt funding and not equity. So that speaks to the increasing maturity of African startups. And there's still a lot of growth to come. I mean, when we put $6 billion in the context of investment in other parts of the world in the venture space, single startups raise multiples of that. Recently, we had Stripe raising multiples of that number simply to sort out certain employee compensation issues. I'm really bullish on the investing landscape here. I think what this will force is an increasing focus on cash flow management, especially from startups as investors increasingly turn to debt as an investing tool. And we'll see increasing maturity of kind of more established startups as they seek probably more debt funding than equity funding.
Quite interesting, as you're mentioning the debt aspect of it, because a lot of entrepreneurs and founders in Africa think that raising funding, you lose all your equity. So very good that you shared that.
Well, one thing I've seen with a lot of our founders is we don't really know how to sell our startups well to the outside world. And I think maybe that's because a lot of businesses are local in context, but debt is an increasingly viable form of funding, even grants. I mean, Tigere has raised about 55K, most of that in grant funding so far. So there is a lot of money looking for the right opportunities. And, depending on the scalability and the right operational metrics, there is money available for the right opportunities for sure.
Certainly. Based on your travel experience, what has been the impact of technology across the continent and anything you'd like to share based on your travel experience?
Sure. Well, when I was still with the World Bank, I saw a lot of really powerful innovations, especially in the context of the pandemic. So a lot of the work we did was pandemic related around edutainment, which is the use of educational materials around infotainment. And that's mostly targeted at school children who couldn't get to school because of pandemic lockdowns and kind of figuring out what kind of ed tech apps to give them so that they could still complete their education in a quantifiable, measurable way. So we saw a lot in the ed tech space, and there have been some really great innovations out of Kenya and Nigeria in that space. I won't name any specific entity, but there's a really lot of good startups and powerful founders in that space. We've also seen a lot in the health tech space. We've seen, more recently, there's been a lot around med tech and people wanting to access healthcare services. So whether that's talking to a doctor or medical professional, whether that's ordering pharmaceutical products on demand 24/7, not necessarily restricted to urban areas. So there's been a lot in that space as well. And then the last part is fintech. I think the age of solving for payment processing, that problem has largely been solved. Now we're looking at kind of the next level, which is value add financial products, so savings products, investing products. And we're seeing a lot of that, especially in North Africa, around, if I have a deposit on a mobile e-wallet, can I use that deposit or those savings to buy stocks or fractions of stocks on the stock exchange in my country or in other countries, and all those sorts of innovations. We've also seen the use of digital assets for cross-border payments. So there's a lot of really great innovation. I think in many ways, North Africa is much more advanced than other parts, other regions, but there's a lot of powerful innovation coming out of Nigeria, Kenya, Ghana, Rwanda, South Africa as well. There's a lot. I think I would say watch this space in the next 5 years.
Interesting. And then there's also the Africa Continental Free Trade Area. So there's a lot that's happening on our continent. Before we continue, to hear a word from our sponsors. IATF is an initiative that supports the implementation of the AfCFTA. It is organized by Afreximbank in collaboration with the African Union, the AfCFTA Secretariat, marking an important step to sustainably address the gap in trade and market information for the successful realization of the AfCFTA objectives. Ms. Kanayo Awani, the Executive Vice President of Intra-African Trade Bank, Afreximbank, said a lack of access to trade and market information is one of the key reasons for the low level of intra-African trade. We hope to see you at the next IATF. So what other markets do you see your model from Tigere as an example working in Africa? There's issues of coordinates, fixed addresses, issues to do with residential properties. in Africa, as you go deeper into other places in Africa, is not as easy as it is in Zimbabwe, as an example? Which other markets do you see being practical?
So amongst our target markets at Tigere, we have Zambia, Uganda, Kenya, and Tanzania in the next kind of 5 years. And the reason for that is we see a lot of similarities in the demographics in terms of the cultural spending habits and saving habits of the demographics that we're targeting. And among those, we're looking for a strong informal sector. We're looking at the regulatory environment for financial services, things like getting licensed and signing up partners and partners' willingness to work with us. And then most importantly, we're looking at the disposable income, ultimately one's capacity to repay. So we have built a proprietary tool at Tigere, and we use alternative credit risk assessment to build a profile of somebody's ability and willingness to repay a loan. So we take 95 data points per borrower, and we build that into the model, and it comes out with a score that kind of allows us to benchmark them at what interest rate they should be lent to. We also connect them with our housing market suppliers, so they can go on the back of their profile with us to one of our housing suppliers and basically draw down on our facility to buy whatever housing inputs they want. So we see our model being scalable across those countries that I mentioned earlier. And we've built that kind of off those three parameters of the regulatory environment, the informal sector, and the disposable incomes.
Interesting. So you're looking at SADC and part of COMESA.
Yes. So of the regional economic communities, those are the ones that we identified. And I guess it touches also on the AFCFTA in the sense that from my perspective, working with another startup with their data analytics, the startup is called 14365. And over there, they're based in Nigeria, but they have a presence in 3 countries, being Kenya and Ghana. They're going to open in 2 more before year. And they are basically Flexport for Africa. They do digital freight forwarding. The founder is Hioshola Ushidame. He's one of the most powerful founders I've come across, and they stand to benefit hugely from the Continental Free Trade Agreement and also further integration between our 8 regional economic communities on the continent.
Amazing. In terms of business opportunities, what product or service do you see that is hot right now in terms of, investing? You're in real estate, there's fintech. What else do you see?
So I'll split it into 2 buckets. In the non-tech bucket, there's been a lot of interest, both in Zimbabwe and more widely on the continent, with your platinum group metals. And of course, some of that demand in the precious metals, particularly, we're looking at perhaps stores of value against currency fluctuations and hedging against kind of the global macro environment with the conflict in Europe and general inflation driven by supply chain bottlenecks. So lots of interest in lithium. In Zimbabwe, we've seen billion-dollar transactions recently concluded in that space. We've also seen strong interest in Ghana and in other places. And then silver and gold. Gold is approaching its all-time high. We're at about $2,000 an ounce, give or take. Silver, we're just under $26 an ounce. And silver is fundamental to the long-term green energy transition. And then within the tech space, I think I touched on it a bit earlier, but within ed tech and fintech and Agri Tech as well, I've met some really great innovations in the Agri Tech space. One of Zim's most successful startups, arguably, is an Agri Tech business, being Fresh in a Box. And there's a lot of really great innovations taking place in that space. So satellite tracking of farmers' yields, helping them plant, trying to figure out what the composition of the land is using kind of satellite technology. And we've seen a lot of interest in solar. There's a lot of solar businesses coming up as well, both at the micro level. So whether that's solar cooking for your rural farmers, or whether that's just, solar inverters in the urban areas to hedge against load shedding and other issues that are becoming increasingly prevalent in multiple countries.
Interesting. You spoke about different things there, but one thing that I also looked at is Zimbabwe obviously being a country that has been predominantly an agri-based economy, definitely there's a lot that can be done in that space. And looking forward to see what that will be.
There's a great founder we met recently at a startup called Umoja Lands, and they're working really well with tens of thousands of farmers to really help them figure out how to optimize yield and get to the next level in productivity. So there's a lot happening in the Agri Tech space, and I'm excited about it. I'm bullish on Agri Tech on the continent and Agri Tech in Zimbabwe. I'm very bullish on that.
Amazing. Any books or podcasts you'd like to recommend to our listeners?
So I highly recommend, it's a bit dated, it came out in 2008, but there's a book called Africa's Greatest Entrepreneurs by Moky, Makura. And why it resonated with me so deeply is that it's easy to read the bios on kind of Elon Musk and your Silicon Valley stars, but some of the issues that they would have had to overcome will be fundamentally different from being an entrepreneur in Africa. And some of that may be the regulatory environment, some of that may be a political transition, some of that may be just investors' willingness to fund. But two of the stories that stood out for me were that of Dr. Strive Masiwa and Dr. Nigel Chanakira. Now, for Dr. Masiwa, it was his faith-based approach to his business and his businesses and how he relied on his faith to overcome various challenges in building out what we now know as the Econet Group. With Dr. Chanakira, it was his relentless pursuit of self-actualization. He believed in himself. He also leaned on his faith, but in building out Kingdom and Micro King and just a phenomenal financial powerhouse. There's a lot in there that I've drawn inspiration from in terms of just being relentless about pursuing what you want to get better at.
Would you travel to Cape Town for business or leisure? What if you could combine the two? Well, you can. With Optimum African Experience, Cape Town Leisure Experience, with partners such as the University of Cape Town, CEDA, Medina, Luminary, and Prime Focus. Experience the best of Africa.
Africa is a continent full of potential, but potential means nothing if we don't take action to create value. Let us take action. Thank you for listening to this episode. Don't forget to post and share this episode on your social media platforms. It will help us reach our mission of sharing knowledge about intra-Africa trade and making it available to as many people as possible. Let us grow our continent. We can go far, fast, together. If you can please leave a review on our podcast page or on Apple Podcasts.